Let's get right to it. Ferrari isn't really a car company. It's a luxury fortress. With a projected EBITDA margin touching almost 39% for 2025, they've completely rewritten the rules of the high-end market. And today, thanks to an exclusive breakdown from HDIN Research, we're going to show you exactly how they built it.
Just look at this number, 38.8%. That's their projected EBITDA margin, which is basically their core operational profitability. Now, to put that into perspective for you, that is a margin most high-flying tech companies or even luxury fashion houses would kill for, let alone a company that actually builds cars. This is the first piece of evidence that Ferrari is just playing a different game.
And this quote from HDIN really gets to the core idea. It's not about rubber and metal. It's about building an unbreachable brand. So how do they do it? Well, we're going to break it down into three key pillars. First, we'll see how scarcity builds the fortress walls. Then we'll look at how a torrent of cash flow actually fortifies it. And finally, we'll stare down the great challenge on the horizon, the electric vehicle.
Okay, let's start with their secret weapon, what we're calling the scarcity alpha. See, Ferrari's true genius isn't about selling more cars. It's all about manufacturing exclusivity so they can sell more per car.
This slide really says it all, doesn't it? It shows how Ferrari just flips conventional business wisdom on its head. While the rest of the industry is desperately chasing volume, Ferrari controls it. Think about this. In 2025, their shipments were basically flat at just over 13,600 cars. They are not trying to sell to everyone. They're making absolutely sure that everyone who can buy one desperately wants to.
So you might be asking, if volume is flat, where's the growth coming from? It's coming from this, the personalization pyramid. This is their real profit engine. From basic programs all the way up to their tailor-made level, every single car becomes a unique, high-margin creation. And this isn't some tiny little add-on. Get this, in 2025, a full 100% of cars delivered were personalized.
And the financial impact of this strategy? Well, it's just staggering. Personalization and product mix added 215 million euros directly to their operating profit in 2025 alone. This isn't a side business, people. This is a core pillar of their luxury fortress.
And here's the big payoff. All of that strategy, the scarcity, the personalization, it all boils down to this one incredible number, an average profit of nearly 155,000 euros for every single car they sell. I mean, many mass-market automakers are thrilled to make a few $1,000s per car. We are talking about a completely different universe of profitability here.
Now, this incredible profit per unit strategy feeds directly into our second pillar, the cash mode. This doesn't just look good on paper, it creates an absolute torrent of cash that makes this fortress almost invincible.
So, what is the ultimate result of a business that basically prints money on every single car it sells? This. Over 1.5 billion euros in industrial free cash flow. In a single year. This is the pure cash left over after all the bills are paid and all the investments are made. This is the moat we're talking about, a river of cash that protects the business and fuels its entire future. And here's how this incredible cash machine actually works. It's generated not just by those super high-margin sales, but by clients putting down huge deposits up front for exclusive models like the F80. That cash then turns around and funds over 1 billion euros in R&D and future-proofing facilities like their new E-building. And even after all of that, there's still enough left to support over 1.3 billion in dividends and buybacks for shareholders. It's a perfect self-funding loop.
But you know, every fortress faces a threat. And for Ferrari, it's the big pivot to electric. This is the 2026 EV gamble. And it's not just about technology. As the slide says, it's a question of soul. Can they really infuse a battery with the passion that defines the entire brand?
On the one hand, you have the heart of Ferrari, right? The sound, the vibration, the visceral roar of a finely tuned internal combustion engine. And on the other, you have the silent, brutal, instant torque of an electric powertrain. The challenge here isn't just technological, it's existential. How do you translate decades of emotion and heritage into a completely silent new form?
And this slide shows us their answer, the Ferrari Luce, their first fully electric car. Now, to tackle that whole soul problem, they're designing and handcrafting the core electric components in-house at their new E-building. The goal is a driving experience that is distinctively, unmistakably Ferrari. But the risk here is immense. If the Luce fails to connect with clients on that deep, emotional level, it could seriously crack the foundation of the entire fortress. So before we get to the final, big question, let's just quickly look at how this scarcity strategy plays out on a global scale. Because this isn't just a factory setting, it's a worldwide operational discipline.
This chart shows you how surgically they manage supply across the globe. You can see EMEA remains the core at almost half of all shipments, but look at what they did in mainland China, Hong Kong, and Taiwan. They actually pulled back shipments to just under 7%. Now that's not weakness, that's a masterclass in using scarcity to protect brand value in a very volatile market.
Which brings us to the ultimate question for any investor. We've seen the fortress, incredible margins, a massive cash moat, a bulletproof brand. But we've also seen the challenge, a huge, high-stakes bet on an electric future. So is this company the ultimate safe haven in a crazy market, or has its price just run too high, making it overvalued?
Honestly, the answer really depends on your view of that massive EV gamble. So, to dig deeper and make your own call, you can download the full 15-page deep dive from HDIN Research. Thanks for tuning in.